Here we go, guys. A little quick market update regarding Bitcoin, cryptos, and the U.S. stock markets. And as you can see, we're looking at the daily chart, Coinbase chart of Bitcoin. And right now, let me bring this to your attention. People are talking about the death cross. That was the 50 crossing down and under the 200. Obviously, is a very lagging indicator as the market's been falling, for quite a while now. But more importantly, near term, what we're looking at, we have this 50% zone here, which we teach our Patreon members about. And, once a breakout has and a confirmation has been made on either side of it, then you have like an 83 to 87% chance of the market moving in that direction. And we haven't confirmed yet, so we're still waiting on that confirmation. And then let's go to our Bitstamp chart here. And as you can see, we're trading in somewhat of this down, wedge formation. And a lot of times, of course, you'll just zigzag back and forth between the down trend lines, but high probability, according to classical technical analysis, price will bounce or go sideways and come up and out of this descending wedge. It's not 100% guarantee. You just got to play the odds and the probabilities here. And the reason for this blue dash line, the little bit thicker one here, is that if we go back, let's just do this, do it quicker. Go back here to this high pivot going back in January. A little over a year ago, had a high pivot here we couldn't get through, finally did, came back under it, tested it a couple of times, consolidation here, couldn't get over it, came back, retested it as support, and then now we've been testing it as support here as well. And I'll just let you in on a little secret here. Well, technically we call this a 2 down, 1 up. Now, it doesn't count until it, of course, confirms. It's a 3-day chart. Each candle is 3 days of price action. And this candle closes actually today. And since we're closing inside the bar, the green bar of this previous breakout candle for Bitcoin, then we have a pretty good chance, odds, probability that we'll get a green candle, breakout candle coming here pretty soon, similar to this one. Okay, so 2 down, 1 up is what we call it. And then, it's the opposite. If you have a red candle, you have 2 green candles up into that red bar, and then you get a dump to the downside. Now, this is my chart regarding my thoughts about Bitcoin never closing a monthly candle under 35,000. And this is what I've come up with here. And this is the Bitstamp, again, chart on TradingView. And we have it on log. And the reason for it is that this is about the longest chart I can find out there that goes back to, August 2011. And whenever you have 2 or more down months, 2 or more red months, followed by 2 or more green months, price never comes back and takes out this pivot low here. Okay, so as we have more than 2, red months down, and we have our 2 green months, we never came back. 2 down, 2 up, never came back, took out that low pivot. Now, technically here, some people have told me, well, that's not really a breakout candle, but it's green. So I'm going to hold it to it. And yes, we took it back. So that was the one time that this rule was violated. Here you have a number of red candles followed by 2 up. We actually closed above this low pivot here, okay? And then where do we have another 2 down, 2 followed by 2 up, never came back. A lot of, one down, several up, that sort of deal. and then you have two down here, but you didn't get two up. Okay, so right here you have several in a row, two down, and then after you cleared two up, never came back. Two down, two up, never came back, and then brings us to the most recent timeline. Of course, three down, two up with a pause candle, and then I'm saying we won't come back and take this out. Of course, we have the 20 there, simple moving average, and well, simple monthly moving average, and then we have a trend line in there. I took it off just to clean things up. So and this is the monthly, okay? So you can go back and look, and if I missed something, let me know there. So that's my thesis on why we're not going to take out that 35,000 at least this year, And then let's go ahead and look at the dollar real quick, and let's go to the daily. And they had absolutely done a bang up job supporting and holding up the dollar. As you can see, we came down, hit the 100 simple day moving average, and then we had this high pivot support over here. Hit three times, finally broke through it. So that's pretty good resistance. Now it should be pretty decent support, and then we've run back up into the 20, that red line. And then what's going to be interesting to see if they can get us back up and over that red dash line, because that was previous support, obviously, and we broke it a couple of times, but they got us back over it. So near term, we'll see this range in here between the 20 and the 100 simple day moving average, what they can do with that. Then if we move the stocks real quick, Dow Jones, again, we closed right under the 100. If we break this long-term uptrend line, we're coming to the 200, and then possibly down here to this low pivot bottom range that we hit several times. So we'll see if that provides support again. Now I have that 23% there, because if you go to the weekly, that's where our 200 is. But we'll hit obviously the 100 first, and a lot of other areas here in the meantime. And let me see if let me take that off, clean this up. Now this was the COVID panic world slam down back in March of 20. The last time the Dow hit, let me just go ahead and take that off, clean it up. The Dow hit the 200 was back in 2016, actually. Okay, so and then we have this high pivot here from February or so in 2020. That would also help. And then I won't waste time putting it up there. We got fib line support areas as well. And let's go to the S&P on the daily. As you can see, let's bring that up here. If we do now, we did break this trend line today on the S&P, and we're probably going. Let me see where that 100 is. I think we've already gone past it. No, right on it. Okay, and as you can see over here, we closed in and around it, bounced, and then we're able to tag it a couple more times. So we'll see if we can bounce off of here, or if they let it fall. If it does, we'll come back down to the 200. Of course, that'll give us about a little over an 8% drop from our all-time high, okay, on the S&P 500. But if you look at all this on the weekly and take everything off, kind of clean it up, we've been running pretty good, pretty hard since back here 2008, if everybody remembers that big slam down. And then March 2009, we started taking off again and bumping that 200 here and there. Again, of course, the COVID deal, that was expected. Last time, looks like into 2018, we came down. So, we could definitely come down here, see where the 50 and this low pivot here would get, of course, hit. We get a bounce off of it. Unless black swan, an anomaly or something out of left field hits, I don't see this happening anytime soon. to the markets. Now the Nasdaq is kind of a leading indicator. It moves harder and faster, either to the upside or downside. We like watching it. We're already down, getting close to the 200, about a 10% drop from the all-time high recently. Then, as you can see, we made lower highs, etc. And we will see if the 200 will hold it. Last time we were flirting with that even was, came through it, of course, during the COVID deal, then came back up in April. So we're about a month ranging in here, going below, then coming up. But that was pretty much a V-shape recovery there. But it is kind of concerning. Let me see where the 100 is. It is kind of concerning. We blew through the 100 and the 50 a while back. So we do need to, that's almost a guarantee. We'll come down here to the 200. And funny how they love those whole round even numbers. They're at 15,000. You just can't make that stuff up. So anyway, any questions, concerns, let us know in the comments. And then here we go on the yield. And we've been blowing up out of this wedge or pennant formation. I like looking at the weekly, kind of slows everything down. Really thought we were going to get slammed into the 200 here and come back in, but that wasn't to be. And then if we start getting over that 2%, that could be even more volatile, for the market, even more concerning. But all right, guys, appreciate you watching. Any questions, concerns, let us know, and we will see you on the charts.